a company joining us now from the IT services space. Mastek reported first quarter numbers, saw recovery in revenues both in dollar and rupee terms, but profits came off. Margins also contracted sequentially. Let's discuss some of this with Hiral Chandrana, Global Chief Executive Officer at Mastek, who is joining us now. Hiral, good morning. Great to have you with us here. Thank you for your time. Prashant this side. Could you tell us how much of the recovery in revenue is due to some of the factors which impacted you last time, like BFSI clients where revenues were not recognized due to execution issues?
Yeah, thanks, Prashant. So, we reported 4.3% quarter on quarter on an INR basis and 12.1% year on year as far as revenue growth is concerned. Our order book backlog year on year also increased. It was 23% year on year compared to last year this time. So both on the top line as well as on the deal momentum and order book, we feel very pleased with the results. Our profits had some one-timers in our Middle East business, which we should be able to bounce back in Q2 and beyond. But as far as the revenue uptick is concerned, yes, we had one or two areas last quarter, which we have recovered from. But keep in mind, right, we also grew 15.8% year on year last year, FY24. So this is coming off of a healthy growth from last fiscal year as well.
So what is a sustainable revenue growth rate?
Yeah, Prashant, we don't give guidance unlike some of the other companies, but we feel confident that the market momentum has stabilized. We have three major geographies that we operate in, US, UK, and Middle East. And we've been very qualified in terms of the key accounts that we're going after. In fact, our revenue increase over the last many quarters has been by reducing the number of accounts and staying flat on the headcount as well. So our operating rhythm is good in that sense. But as far as the sustainability, we see continued deal momentum. Like I said, our 12 months order book backlog is on a positive trajectory for the last 7-8 quarters. And I think with some of the positive momentum in the general market sense in the second half of the year, we see digital and cloud deals starting to come up. Gen AI, which has been more in experimentation discussions, is starting to move into execution. And I think, as you look at the next fiscal year or the next calendar year, we feel very confident about leveraging that investment that we've made in an Iconics platform, which is our Gen AI portfolio. So, yeah, I mean, we're bullish on some of the revenue uptake going forward.
All right. Hi, Mr. Chandrana. And your tone is clearly sounding more optimistic than what we spoke to you the last time around. But as you mentioned, last year you grew in mid-teens. Do you think this year you can do as much?
Yeah, we want to kind of maintain the same level of momentum. Okay. Nigel, I think that's a healthy growth in terms of the 4% quarter on quarter that we delivered. So we want to sustain that going forward. Like I said, there's newer areas that customers are opening up. Our 4 key strategies are firing on all cylinders. UK elections are now behind us. So there's a lot more clarity on the UK spend in terms of our public sector presence, which is a very important part of our business with health, defense, and some of the key policies that we're involved in. And our US market is bouncing back well in terms of some of the key deals and accounts. So, yeah, I mean, as far as overall revenue and uptick in the future quarters, things are coming along well for us.
Got it. All right. So maybe it could do as much as what you did last time, or maybe even a little bit better than those mid-teens. That's what we gather from what you're saying. The other chart that came up as you were telling us about the growth momentum was the margin picture. And that's a little bit worrying. Could you tell us why there was a contraction on a sequential basis? And do we see an uptick from here on? What should be the band we work with?
Yeah, we've actually, communicated even in the past that we like the kind of the high teens, if you will, in the 17% range in terms of operating EBITDA. And so that's still very consistent in terms of where we want to be. We did have, a couple of one-time hits in Q1. There's holiday season in the Middle East, particularly, which is a seasonality of Q1, and the collections. So we do have to make a provision from an accounting and law perspective, but that will bounce back. There are a couple of deal delays that we also had, which have closed since then. But we wanted to keep the resources so that we don't have to rehire them in the future. So there's some, tough calls that we had to make in terms of making sure that we focus on growth. But yeah, I mean, Nigel, margin should be getting up back out there in our levels that we feel comfortable with.
So, Mr. Chandrana, would that be 16% or 17%? I mean, in the better quarters, in the recent past, you've gone all the way up to 17% and beyond. So what is a sustainable level to expect?
Yeah, that 17% is the level that we'd like to be in the second half of the year, which is H2. Our first focus right now is to make sure that we get back and recover some of the margin hit that we had in Q1, which we are confident about in Q2. And then, going forward in H2, maintain a 17 or a little bit higher level in the second half of the year.
Okay, our shareholders will definitely like the sound of that. Another thing that the street really took note of was this partnership that you got into with NVIDIA. It was for this ICX Pro platform. Anything associated with NVIDIA gets people very excited, right? So can you just tell us a little more about what sort of a partnership is this? What are the revenue implications, and how do you expand on it going forward?
No, absolutely, and thanks for that question, Surbhi. I think, if you take a step back, there is a broad range of service offerings that we have been working on and developing as part of our Mastek Iconics platform, which is our Gen AI portfolio of offerings. This NVIDIA partnership is super exciting because we've been working with them for the last 9 months, and we did announce the partnership, like you mentioned. This is at 3 levels. We have developed a conversational engine, an insights engine, as well as a correlation engine. So what that really means is that some of our platform sits on top of the NVIDIA infrastructure, which gives us access to large language models in many companies. And the way this helps is shortens the time to market to develop industry-specific use cases. So the release that we had was on the manufacturing side, which was an intelligent parts management use case. And our teams are working on a benefits verification use case in healthcare, as well as in the fraud analytics case in the financial services. So our focus on AI and Gen AI with the ML and Ops is very industry specific, because we believe that's our differentiation in terms of how customers are looking at innovating with AI. And that's really what the partnership is about.
All right, congratulations on that partnership with NVIDIA. We look forward to our next conversation, and we'll take stock of some of the progress that you're talking about in terms of not just your business, but how you view the industry as well. So positive commentary, much better and positive commentaries compared to the last time we spoke with the management at Mastek. We'll go across to Anuj now, and we'll